Jeffrey Kalinsky is right. In retail, service is everything. One bad experience and the customer may never come back to your store. There is one company in the US that has staked its reputation on service, and that is Nordstrom. They put customer service above all else. In fact, in their annual report, they say that their objective is to provide high quality customer service. Nordstrom is a business in transition. Like all businesses, the internet is having a huge impact on them. Nordstrom is transitioning to a business model where they find flat or single digit growth in sales in their full line retail stores, while their online businesses grow at a robust pace. To protect their reputation, they'll have to clearly define and excel in customer service both online and offline. So, let's look at how well Nordstrom is transitioning to this new business model by looking at some of the financial results from the past few years. Here's the total revenue earned by Nordstrom for each fiscal years from 2010 to 2015. This total revenue includes revenue from their credit card operations. As you can see, Nordstrom has seen a healthy and robust growth in revenues since 2010. Since Nordstrom's credit card operations is not core to their business, we are going to ignore the revenue earned by that division. Besides that, their credit card operations are just 3% of revenues. So this gets us to the really interesting part. The sales revenue Nordstrom has earned from selling merchandise. Here we find out their growth rate has been very robust, growing revenues by over 7% in both 2014 and 2015 is an incredible achievement. So which channels within Nordstrom have helped in achieving this growth rate? Let's dig deeper into the numbers. To dwell deeper into the revenue numbers, we need to understand the various sales channels within Nordstrom. Nordstrom has 118 full-line stores in the US and 3 stores in Canada. Nordstrom.com is the e-commerce counterpart for the full-line stores. The off-price stores is the Nordstrom Rack, and there are 197 stores in the US. NordstromRack.com and Outlook are the e-commerce counterparts for the off-price stores. Jeffrey Boutique are a couple of luxury retail stores that Nordstrom acquired from Jeffrey Kalinsky. Nordstrom.com has been on fire. In 2012, it had more than $1.2 billion in sales. It closes 2015 with $2.3 billion in sales. In 4 short years, Nordstrom.com has almost doubled their sales. The growth rate is very impressive. With a high of 27% in 2013, their growth rate has slowed a bit to about 15% in 2015, but it is still a very impressive number. The growth rate of Nordstrom.com is very impressive. But is there another sales channel that can top that? Well, the growth rate of off-price online stores has been even more impressive. In 2015, NordstromRack.com and Outlook had over $500 million in revenue, and the growth rate was over 47% in 2015. It is extremely difficult for Nordstrom's full-line brick-and-mortar stores to match those growth rates. In fact, the full-line stores have seen a slight decline in revenue. In the future, it is very critical for these full-line stores to stabilize their revenue so that they do not become a bigger drag on overall revenue growth. The off-price retail clothing stores have done very well since the Great Recession of 2008. You need to look no further than Ross stores. Nordstrom Rack's performance is very impressive too. Revenue topped $3 billion in 2014 and crossed $3.5 billion in 2015. The growth rate is an impressive 9%. in 2015. The management at Nordstrom know their priorities. They need to keep growing online sales for both Nordstrom.com and for NordstromRack.com. They need to keep growing their Nordstrom Rack stores. Finally, they need to stabilize their sales at their full line stores. This is an exciting time for the retail industry with lots of changes, and Nordstrom is a great company. They focus single mindedly on customer service, and that's the right focus. I hope they continue to do well in this challenging retail environment. Thank you for listening.